Well, in a moment, we'll have an update, the latest GDP data for the September quarter. Joining me is Ross Greenwood, our business editor. Ross, what are we expecting and what will it all mean?
Well, I think really to get this into some perspective, you've got to go back 12 months when Australia was in lockdowns. Australia's economy at that time lurched downwards. And so what we're going to see is really an artificially high annual number, expected by the markets to be 6.3% the annual growth. The quarterly growth, though, will be 0.7%. And remember also that the Reserve Bank has warned about a slowdown in Australia's economic growth coming forward. So we'll see this very, very shortly, but that's broadly what the expectation is. Australia's annual economic growth has just come out. 5.9% is the annual number that's come out, and also the 0.9% has come out on the quarterly number. So that's what's taking place at the moment. We'll get you the details of exactly what's come out from the Bureau of Statistics right now. It will be one of those points where you can look through this data, because even things such as Australia's economy in terms of exports slipping into deficit for the first time in almost 3 years. Those numbers came out yesterday. They gave some indication of maybe a bit of a slowing in Australia's economy. It isn't necessarily what's taken place here. In fact, the quarterly number itself has been stronger than anticipated by the markets. But that important data is right now through. I'm just getting through the Bureau of Statistics itself. It's saying that there was the economy rose by 0.8% during that quarter, and effectively also saying that household savings fell to 6.9% from 8.3%. There it is there, 5.9%. And so as a result, it is strong, but certainly not as strong as what the markets were anticipating.
Yeah, so I've just got figures up here. They've got nominal terms GDP 0.8%, but seasonally adjusted 0.6%. So
yes.
GDP are we at 0.6, Ross? Because that's lower than expected.
Yeah, that's 0.6 and lower than expected. That's right. That's 0.6 lower than expected. So the annual number also at 5.9% is lower than anticipated, which was expected to be 6.3%. So if we go through some of the other detail of this as to what's taken place here, what you're going to start to see is some of the state data. And if we have a look, say, for example, what's below that trend? South Australia is below it. WA to a certain extent, Victoria. Look at that. Really, Victoria's economic growth there is really a drag on the national economy right now. You can see that Tasmania is stronger than anticipated. So this really is a story in many ways of what's taken place in the states. Queensland, New South Wales, pretty much right on the mark. Northern Territory strong. Western Australia, probably during this period, you might see that mining and resources, sort of, if you like, prices had been coming off during that time, and also energy prices, LNG prices, off just a little from their previous peak. So that's partly what's making up the mix there. Then on top of that, what is actually helping the economy right now is more tourists, inbound and outbound. But the problem is that more tourists leaving the country are really a problem. So this is the cumulative effect. You can see really here that there's a slowing in the economy from where it was the previous quarter, but certainly it's not where it was last year when COVID was closing down the economy. So that's the key takeaway from it right now.
Yeah, so as you say, the 5.9 is almost meaningless, because it still takes into effect the second biggest negative figure on that graph, if you like.
Yes.
Once that's out of the picture, in the next period, we'll get something approaching normality, although of course we'll still have that huge uptick, won't we? So look, we're a couple of quarters off doing that. I guess the other thing is below expectations, 0.6 in isolation, Ross. If things stay at that sort of level, it's another bit of pause for thought for the RBA about how many more rate increases we have, because this is another measure they'll be conscious of.
Well, they will be conscious of this, but by the same token, one of the points that we're going to be watching is this chart right here. This is household savings ratio. So the household savings ratio, what we can see right now is 6.9%, having come down from pretty much 8.3% previously. And so that means that Australians are dipping into their savings to basically afford higher interest rates and to afford higher energy prices and to afford the higher inflation in our economy. Now, that savings ratio historically historically you can see is just a little bit above its long-term average, but the reality is it's way below the highs when money was being handed out during the pandemic. Now, the point is that the Reserve Bank will be wanting to see that to reduce even further, because that will then start to show that inflationary pressures will start to ease as Australians start to cut back on their spending. So this is one of the key numbers for the Reserve Bank, certainly one of the key numbers for households as well, because that also gives some indication as that Australians are not saving as much money as they were previously, but by the same token, still more than what they have been historically. I think that's the key there.